So homeowner fees is another negative.
We do not have those. I don't believe in those.
Our criteria looks for houses that do not have that.
But also,
what's the risk of?
Hold on, but also looking in the area to see what the other houses look like around you, because the risk is that people don't maintain their properties and then they look like crap, and then your house, like, you know what I'm saying, it brings the value down of your neighborhood down. We're very fortunate to have people that take care of their area around us. But I mean, there's negatives about being in a neighborhood that has a homeowner association, because some of them don't uphold the rules unless it benefits them.
Right.
So I think this is a quick side note. We go to the next one. But like in my mom's neighborhood, I think like only 10% can be rented out for like rental properties and whatever. They don't follow that rule.
Definitely.
You can't park on the street. Everybody parks on the street, like, because it benefits the people that are empowered, because they're the ones renting their houses out and there's no parking, so their people park on the street.
Yep.
But that's a side note. That's why I'm not a fan of homeowners association. Unless they're going to give me a pool and it's going to stay open year round and it's heated, I'm not signing up. Go ahead.
So yeah, homeowners association can definitely be a huge negative. But then the non-HOA places, so somebody could randomly be, adding stuff to their neighborhood or to their house that negatively affects yours. So, such as an RV park in the front yard or something, whatever. But
I mean, that doesn't impact me.
Anyway. So real estate is something that is not easily sold, right? Because it's dependent upon
buyers,
mortgages, and mortgages take
and
time.
Qualified buyers. I think we're running out of those, but go ahead.
So it's not easily bought and sold like a stock. Like a stock, you can buy and sell all day long. You go and click and buy and sell all day long.
Yep.
Whereas it may take 60 days to sell a house.
I mean, that's the bare minimum.
It might take 6 months to a year to sell a commercial property. So, that makes it dangerous because the market can fluctuate in those amount of times, right?
That's true.
You may have somebody that's willing to buy the house for 60 days and then all of a sudden their financing falls through because their bank goes bankrupt or something.
And then you just held a property for 60 days that you had to continue to pay for.
And maintain.
And still continue to pay for until someone else puts the offer in.
Right. So,
all right, what's the next negative?
So, if you go to flip houses, you end up paying about half of what you make in taxes, right? Short-term capital gains on the property.
I'm not paying.
So you go so all these shows show, I made $50,000 on a flip. Well, $20,000 or $25,000 of it went to taxes.
Oh, because they didn't hold it for long enough.
Right.
That's dumb.
Right. But
or did they show you that? Maybe they do that and they don't show you.
Yeah.
That they hold it. I don't think they would hold it for 2 years though.
No.
On those shows. Or is it 2 years or 1 year? It's 2. 1.
It's 2 years.
2.
For real estate. Whereas it's just a year and a day for stocks. So.
Yeah.
So maintenance.
HOA.
HOAs.
2008
market crashes. Not being able to refinance. and the fact that real estate is not bought and sold easily because it's a big purchase item, big ticket item.
Yeah.
Right. Anything else? As far as
I said maintenance too.
Yeah, we said that. Maintenance.
Oh, I didn't hear you say that part. I mean, that's all I can think of right now.
And I guess a bad neighbor or something.
I mean, you
get that in
apartments
too. So.
And they're not going to let you move, so.
All right, so down to the nitty gritty. What is our real estate criteria?
Ours personally?
Yeah.
1980
and newer.
No HOA.
We particularly want between 1980 and 1996.
Because the houses were made better.
Because of the type of wood houses were made with.
Mm-hmm.
It wasn't cheap material.
No HOA.
No HOA.
A slight fixer-upper, but like no structural damage to the house.
Right.
But
no foundation issues.
But slight stuff like what we did to this house that we could upgrade, like painting, flooring, ceilings. Wake up.
Hole in the wall.
Yeah.
Whatever. Leaks.
Not in a flood zone.
No flood zones, for sure. Which is crazy that there is such a thing as not a flood zone when you live at the beach.
Well,
right.
There technically everything is in a flood zone here, but it's like the minimal flood zone. Like we're in an X flood zone, I think. I'm pretty sure, which is the bare minimum, which you don't need to have flood insurance for, but
you still should have it.
You still should have it. It's not that expensive. I think it's like $500 a year or something like that. $400 to $500 a year, just in case.
You just never know.
For people that are in a flood zone. But if you're in a flood zone, you're paying like probably 10 or 15 times that price.
For all we know, a storm drain could get clogged up and back up into the road and then flood us out.
not. Don't talk about that. I'm not be dreaming about that tonight.
You just never know.
Because it's raining now.
So that's why you have flood insurance.
I hope that doesn't happen though.
I hope not either.
But that's why you have insurance. On the floor. Not a lot, but whatever. Okay. What else?
So we want our property to follow the 1% rule.
Oh yeah, I forgot. That's probably like the most important.
So the 1% rule says that the property will rent for 1% of the purchase price, right? So if you pay $150,000 for a property,
do you know what 1% of that is?
That is $1,500.
Oh. I was going to do the math.
Go ahead.
No, go ahead. No, go ahead. Keep going.
Times 0.01. All right? Yeah, good. So $1,500 a month. So what do you do if it doesn't follow the 1% rule? What do you have to do to make it follow?
House hack?
No, you have to pay a bigger down payment.
Oh, okay.
So say a house was $220, but they would only rent for $1,600. You would have to have a $60,000 down payment to make it follow the 1% rule, so you would actually make money.
Right.
And be cash flow positive. Right.
Positive.
So that you could afford to do the maintenance on the property over time.
Yep.
And saying most gurus, what do? They show you that only 20% down or 5% down, when in reality, to make things follow the 1% rule, you're going to be paying more down than that, so that you actually make money every day, every month. Right? So that's the biggest thing for us, is to follow 1% rule.
Yep.
So 1980 and newer.
1% rule.
1% rule.
No HOA.
No HOA. No flood zone.
No flood zone. That's it. You think you're missing something?
Mm-hmm. Only minor cosmetic damage.
Yeah, that's what we're missing. Cosmetic.
But that's called,
I'm sorry.
like a fixer-upper. It's called buying a wedge property, where you can add small value to make it worth more.
Mm-hmm.
To force appreciation on the property. That's what we're looking for.
Yep.
So if you got one of those, holler at us. This has been our podcast on real estate.
Real estate.
They say real estate is one of the best investments out there. You know, if you have the opportunity to purchase, you definitely should purchase over renting, in our opinion.
If it works best for you. And the math is right.
Like I say.
And the property is right.
Right. If you follow the criteria, you pretty much can't go wrong. If you make it follow the 1% rule, you're going to make money.
Yeah.
You know, you keep an 18-month emergency fund.
Yep.
So if your payment's $1,000 a month, that's 18 grand in an emergency fund. Makes it a little harder than this 5% down they always tell you about, right? 3.5% FHA.
FHA.
Or 0% USDA.
Should have done that.
No.
That's a whole other topic. I'm just playing. But yeah.
But this has been the So What You Want to Talk About podcast. If you got stuff from this video helped you, make sure you like and comment down below. Tell us what you thought.
I mean, even if it didn't help you, you just want to comment. I'm cool with
Yeah,
that.
if you hate what I said, hit the dislike button.
No, don't hit the dislike button. I just want to hear some feedback. But
like I say, you should always be educated in stuff that you invest in.
don't always take people's word for it. Do your
Right.
own research.
Do your own research.
But also do what's best for you.
Yeah. So I'm Nate.
I'm Meredith.
And this is So What You Want to Talk About podcast. And we'll see you next time.
So what you want to talk about?